Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we're going to be taking a look at the stock market as well as some seasonality data and the Magnificent Seven stocks. So let's start off with fear and greed. And the stock market was just recently getting down into fear on the CNN chart, now back up into greed because markets have been pumping since the election, as well as on pie vesting. It was an extreme greed, came down towards the neutral area, but pumping up again. And as far as crypto, and by the way, I do a lot of videos on crypto, the rainbow chart, Bitcoin mining stocks, other factors to do with crypto. So if you're interested in that, please subscribe. But crypto been going sideways in greed, and now it is at an obvious tick up, especially because Bitcoin is getting further into that all-time high territory. So let's start off with this chart. And I think I'm going to only hold on to this for the videos for another week or so. But we were talking about how regardless of whichever party wins, that there's increased volatility going into the election. Pullbacks are to be expected. But post-election, Q4, regardless of party, tends to be a bullish time of year anyways. The charts even showed that from October to March or November to April is the most bullish time of the year. So any pullbacks that happen September, October, usually a good time to get in. So just something to keep in mind that this is to be expected, and hopefully this will continue throughout the next 3 to 6 months. Now, in this video, I also want to talk about the Fed because the next couple days, the Fed is meeting and they're having their FOMC meeting to talk about future rate cut decisions. Now, the odds are that the Fed is likely going to do a 25 basis point cut. Now, as far as this chart that you see right here, you see that when there is a cut, which is this vertical line, that if we are in a non-recessionary environment, we follow this green line. And we follow that quite a bit. We're already in all-time high territory with the S&P. We already had the August yen carry trade unwind that did almost a 10% decline. So really close to this average that we've seen happen before. And we are still getting into all-time high territory. So far still following that green line. When Fed rate cuts typically mean recession in the near term, follow the light green line. We are not there, at least yet. Now, the Fed did cut by 50 basis points, and you see that when the Fed is cutting large and fast, that means something in the market's broken. They're trying to fix it as quick as possible, and usually they're a little too late. Now, the Fed did cut by 50 basis points, but I'm not saying we are in the great financial crisis 2.0 or the dot-com bubble 2.0 quite yet, because they didn't cut at all during the month of October. So a way to think about that would be is that during September and October, that was an average of 25 basis points. And if the odds are correct that they're doing another 25 basis point cut tomorrow, then I would say we're more in line with a 1998 style scenario. Dot-com bubble, AI bubble, somewhat similar. We also have inflation as a possible thing to think about in the future. And I do believe we are getting near the end of a secular bull run cycle. And one of the reasons would be this is just I believe it's called the Shiller forward PE chart. And as you guys can see, when these ranges are very elevated, which we are right now, that tends to coincide with tops in the market. Now, you can see things have been very volatile. So this Shiller PE ratio that topped in late 2001, this was, of course, before the Great Financial Crisis. This was, of course, that was after COVID. So when rates were down to zero and then there's all the money printing, things got elevated. So if we're getting elevated again, do be cautious as we get into this pink area as far as the Shiller PE. In this chart, you can get on longtermtrends.net, by the way. So shout out to them. Let's get over into the charts. So just, by the way, the reason I show that macro data, just something to have in your mind. If you are thinking about any sort of stocks, I would not say now is the best long-term investment time. Do be careful with that. And if you are looking at long-term investment plays, I don't know how much the stock market will correct when it's that time, when a recession does hit, whenever in the future. I don't know when that'll be. But when it does, we look for those 25% drawdowns plus all the way to 50%, whatever it may be. So let's get into the stock market. And oh boy, you can see the S&P 500. We're on the daily right now. When is the last time we've seen one of these big green candles? So it's been a while, and just this thing's sticking out like a sore thumb. So you can see there on the side of the screen how much it's gone by, but we were up as much as 3.31%, which is crazy. Getting towards that 6,000 level. Now, I drew a couple parallel channels or trend lines, if you will. The stock market overall has been in a parallel channel since the great financial crisis. You can see down here, not getting any higher than those highs in the channel. The only time getting lower, great financial crisis. But again, just drawn from the bottom there. And you can see that even in the COVID crash, even during the COVID crash, it got down, candle body close to that level. So just going by some previous times that we've peaked back here, we've been crawling up this trend line here. First is resistance, now support. You can see the weekly bouncing right off that support. And if we are to get up to this next trend line, if you will, that would be in the low 6,000 to mid 6,000 range. The upper end of that channel is close to 7,000. So if the stock market starts to get anywhere near 7,000, I think that would be an appropriate time to be concerned. So let's actually take off the buy sell signal here. Well, we could turn that back on, but let's do the RSI. Okay, the RSI, something important to note here is we still have this bearish divergence, decreasing strength. Now we'll see what happens with this next move here, but when we have decreasing strength and increasing price, it's bearish divergence. It can take a while to play out to eventually have that strength roll over into the markets or have the markets roll over. So just something to keep in the back of your mind. Of course, volatility. Look at that volatility spike going downwards. Let's zoom in on the daily. So volatility has been hitting these levels at about 23. And as you can see, just today, volatility fell right off. So the Trump being president seems to be bullish for the market, obviously, and people are feeling better about that Trump being president is going to be good for stocks, good for crypto, and that's why it is not volatile now. Now, with the FOMC meetings being the next 2 days, when the Fed announces rates, we'll see what happens. So is this big move during and post-election day just something that's going into the FOMC meeting, and then when they announce the rate, then volatility comes back and prices come down? We'll see. But before I make any sort of monthly purchases out of my budget towards any dollar cost averaging stocks or cryptos that I'm looking into, I want to see how the markets react to the FOMC and see what it's doing from there. As far as the percent of stocks above the 200-day moving average, look at that spike. It's getting up there. So when we get to this, you can see right here towards the 70s level, that tends to be pretty extended. Let's take off the RSI actually. But moving further back, this was a very euphoric time in the market, and that's when it was at around 90. So if it starts to get to 70, see what happens there. You can see how that's been resistance in the past, 70, but if it's getting above that, that tends to be a euphoric time in the market. Another factor to keep in the back of your mind is the yield curve uninversion, and typically from the date of uninversion, which was September of this year, and this, in most simplistic terms, it's when the rate of rates change from the Fed having higher rates to when they're doing rate cuts, lower rates. It's when you get the uninversion. Typically, it's a year or two until you see the bottoms of the market from the uninversion. Now, this has been one of the most uninverted times we've ever had. So does that mean we're going to take even longer from uninversion to the next market bottom, recession? Maybe, but the way this has been mapped out just from the past, you'd be looking at market bottom sometime around 2027. So just something to keep in your mind. And again, we're just going off of the time frames from historical data. But as you guys know, things that happen in the past don't always have to happen one-to-one in the future. But Just something to keep in mind. Of course, unemployment, flat. And let's zoom in on that a little bit. Unemployment stayed flat from last month to this month. And as far as inflation, let's get this going here. Here we go. As far as inflation, I have to take this off log now. Still down here towards 2%. So unemployment being flat, inflation being down, those are good things. That's why the Fed is slowing their rate cuts. At least I assume they're going to do another 25 basis point. We'll see. But just something to know that with the rates, and actually let's go to that. I believe, what was it? Here we go. As far as the rates are concerned, so I made at the start of this video, you guys heard me talk about 1998. If the Fed is going to average 25 basis point cuts for a bit, you heard me talking about 1998. Where was 1998? Well, that was right here. So people knew we were in a bubble. We knew we were in a dot-com bubble. No one knew it was going to go to the crazy highs that it did. But what happened is that the rates, they did cut, and then eventually they held and had to start raising rates again. So if inflation concerns ever come back, by the time Trump's in office, then don't be surprised if you see rates come up. Of course, going off of what happened last presidency, if any of you guys remember Trump yelling at Fed Chairman Powell to lower the rates, we'll see what happens with the political pressure. If they want to lower rates and turn on the money printer, and if so, you can see a euphoric time in the markets, but that could create inflation problems. And again, with that happening, then what's the Fed going to do? Will they have to cut to fix a hurting, broken economy if unemployment goes back up? Or will we deal with something like stagflation, something that hasn't happened really since the 70s, I believe? So all big things, just to have it in the back of your mind, not to say that we can't make money. And if we are still in the mid to late stages of a secular bull run, in my opinion, there's actually more good money to be made in more risky assets like crypto. That's why I'm paying attention to crypto, and I'm being more cautious with the long-term plays. But if there is good deep value, of course, I'm looking to get in there. So just keep in the back of your mind those scenarios, and that being a possibility. Now, let's get into the Mag 7 stocks. So we have NVIDIA, and as you can see, wicking up into new all-time high territory. So since NVIDIA has had its stock split here, we've been going down and sideways for a bit, and now getting further up. And let's see, let's make sure we are on log scale. Very good. So would I be buying NVIDIA right here? Me personally, no. I believe whatever stocks you are going to buy, one, you need a plan, a budget, something you can afford and not be stupid with. And here in market psychology, we talk about using emotion as an indicator. So you're not FOMOing in and chasing the hype, the good news, and the pumps. And this is the most simple way I can put it. NVIDIA, it's a little bit above a 3.5 trillion market cap. If you put in 10,000 in NVIDIA and you want to double your money to 20,000, then you're expecting this to get to 7 trillion. Okay? That's more than likely not going to happen anytime soon. And also, when I'm taking a look at when to buy stocks, like if NVIDIA is something I really like, then I'm making a plan to get it when it's coming down to these fib levels or to these macro moving averages. This is just on the daily, and you see how extended it is. Okay. And again, we talked about the RSI indicator before. I'm just going to show you some few different indicators right here, show you what I look for. On the daily, okay, the RSI still has a little bit of room to run. On the monthly, you can see there is some level of bearish divergence forming. We'll see how high this peak goes. On the moving average convergence divergence, also known as the MACD, you can see it's just starting to get positive. So things can move in an upwards way. And I also talk about using the stochastic RSI. You can use for many of these, but I like to take a look at these on the weekly when it's down here and moving up blue above orange into the shaded area. So I like to look for some of those factors when dollar cost averaging in, but I especially like having sometimes just a simple buy sell signal, and on the weekly looking for those green dots. But again, also the moving average it likes, or the lower fib levels. Okay, and a fib you can draw from the high to the low, or the most recent macro low to high. couple ways to go about that. Don't want to spend too much time. I'm just trying to show you guys that strategy means a lot more than predictions. You might want NVIDIA to double your money, that 10K. You might want that, but it doesn't matter that it's likely not going to happen. So if you believe in NVIDIA long term, 10 years, 20 years, 30 years down the road, and you're just looking to dollar cost average in, I think some of those indicators or tools, if you just check once a week, you will be able to get those cheaper discounts. And again, if you like a stock enough to put money in it now, you need to love it even more to get it when it's at a low discounted price. That's how a market psychologist thinks. Microsoft, look at that. Sell signal on the weekly, getting down. Again, I said this 50-week moving average would be important. Now, that's 50-week moving average mostly is a difference between being bullish and bearish as far as the sentiment. Now, all because something's bearish doesn't mean that it's not a good value to buy. So if you like Microsoft, I don't think this is the worst area to dollar cost average in. 50-week moving average, usually pretty close to the 200-day moving average. And if you take a look right here, what's going on? Big daily buy signal. So if you're trying to get in front of things with Microsoft, now it's at 420. All right, smoke them if you got them. So already today, just big move up. So if you're looking to buy down here and you're waiting for that buy signal, you're like, what the hell? We're already up here. And there's some resistance on these moving averages. Up to you, but we do have that buy signal. So if you dollar cost average in here, cool, sure. 2-3 year time frame, is this still going to be a great area to dollar cost average in? I'm a little torn on that, but if you like Microsoft, no matter what, I'd say this is the start of discounted levels for me personally, and I would not blame you one bit. Apple, you can see it came down to this is the 1618 fib. So I drew the Fibonacci retracement from the high to the low, took the fib off log scale. The 1618, big important area, came down to it at around 220. I think this would be a good area for support for Apple at 220. And if it's to have a bounce and move further up to the 2618, you're looking for a price target of 280. But again, with these three stocks we just reviewed, remember, they are over $3 trillion in market cap. And even in the most bullish of scenarios, this bull run, this secular bull run cycle, the next year, I would be taking a look at between the range of 4 to 5 trillion max for market cap. So not saying gains can't be made, but do be very careful with this. So Apple, I love all these stocks as far as good long-term stocks, but they're a bit rich for my blood. Microsoft would be maybe the only one if I was a long-term Microsoft stock player. Amazon, getting into all-time high territory finally. So you can see, again, we drew fib high to the low. Let's make sure our fib is off log scale to see the fib extension targets. So all-time high, retested it once, twice, 3 times, 4th time, got above it, came back down to the moving average as well as the fib here. Okay, again, and finally we're breaking up and through. So Amazon 1618 target, where you would probably see profit taking, is at around 255. So take a look for that. And of course, if it gets some weakness, comes back down, that all-time high territory in the 786, Amazon's been loving being between 165 and 190. Google, what do we have here? So you can see got up to the 1618 or close to it, came back down, okay, to the all-time high area as well as the 50-week moving average, and going back up, okay? And so we'll see if it can revisit the 1618 again at 193. And now these stocks, Google and Amazon, lower market cap. Okay, we're talking around the 2 trillion area. So if it gets above the 1618, you see the 2618, somewhere around 260 would be a good macro price target, in my opinion. And if I'm buying Google anywhere, when it's tagging these, you can see it likes the, let's put this, I don't know, you can see how it likes the 50-week moving average macro-wise. So if you're getting those areas and you're looking for some good profits, you don't have to wait for 260 on the fib in order to be hit. You might wait for 250 and maybe try to get it a little underneath, because sometimes we'll zoom in on this again. Sometimes it doesn't stay near those fibs very long. You still just wick to that, and it can be very hard to catch. So if you're taking a little bit of profits, just 5% away from that area, I think that's pretty smart. Meta, this chart has been the most curious to me, because it's curious how strong Meta looks. As far as if I'm in any stock, I want a chart to look like this, where it's just crawling up and never really gets below the 20-week moving average. Now you see the two red lines. There's the EMA, the moving average, and the SMA. Okay, and right now you can see the sell signals. They usually don't last long, and it's at the 1618 level. Okay, if Meta, unless it's to really get under and get to the 50, I don't think there's anything to worry about. But the 1618, we're talking about Meta going up to 860. I mean, are you kidding? But then again, look at the market cap, 1.4, 1.5 trillion. So if Meta gets up to 860, would not be surprised to see some good profit taking there. And as far as Tesla, being the last Mag 7 stock, and you can see right here. So we have a lot going on. Let me step back here for Tesla. Tesla's chart I just find to be so interesting. And as you guys know, I'm not a big Tesla lover. Now I'm just going to talk about the chart exclusively in a minute. I don't love it big time just because 90% of their profits come from their automotive sales. That being that as it may, they have a great balance sheet as far as assets, liabilities. But I have questions about Elon Musk. Okay, he puts a poll out literally here saying, "Well, I'm trying to be a nice guy, pay taxes. Should I sell Tesla stock to pay taxes?" He put that out here. Can't tell me he didn't know what he is doing, selling the literal top and making people praise him for it. So since then, Tesla's been in this downward wedge. You can see hitting these areas, which also coincide with the 100-month moving average. So if you bought the 100-month moving average, been a great low value time to buy, bounces off there. But then it got above here. On the monthly, this is just a wick, but now it's really getting above. And then move above, you can see it's going in this channel. And when it came down to the upper end of that wedge, okay, the upper end of this wedge, the lower end of the channel, these moving averages, it just has been shooting up. So if Tesla is continuing to move up, we have the channel an area around, I'd say 350, mid 300s, but we also have the 786 here at about 306. So don't be surprised to see some profit taking there between 306 to 340, 350, somewhere there. So Tesla, I think, acts in some ways as volatile as many cryptos. And if you're to take a look at charts daily of the trading volume for different stocks, some of the highest trading volume isn't for the top stocks by market cap, but Tesla is usually in the top 3 to top 5. So is Nvidia. So sometimes that extra trading can really push the prices up on these stocks. So just Tesla's one I would say be very careful with, especially as I was talking about possible recessionary concerns or market downturns in the future, which typically happen post yield curve on inversion. Tesla would be the one out of the Mag 7 stocks I'd be worried about the most. And just kind of going back to that idea of, being careful with your money in the past, guys. So this was the top of 2021. And as far as the drawdown from Apple to the bottom of 22, you can see 30%, okay? Going all the way back to the great financial crisis right here, even Apple, top stock right now, got down to 56%, okay? So I'm always looking at that for top stocks. If I really love Google or any of these top stocks, Microsoft, if they start getting down 30 to 60%, I'm getting really thirsty and simping for some of these. So imagine getting Apple at this value of around $3, post however many stock splits and things such as that. So do keep that in the back of your mind. It might be good to make a plan for that in the future. I'm not saying not to invest now. Nothing's financial advice. But if you keep that in the back of your mind for the future, to have some cash on hand or to take profits if the markets gets really extended and then be able to buy back in when it's at these lower moving averages or down a certain percent, where you're like, you know what, heck with it. Apple's down 50%. I'm aping in, regardless of any other indicator. I don't blame you in the long term if that's part of your plan. That's part of my plan. It's hard to time things, but I'm hoping to be able to pull off some of those moves here within the next year or so. So far, big bullish day in the markets, but do be cautious. Of course, be cautious when there's greed in the markets. And should this continue post FOMC, do not doubt that we might get into extreme greed. And if there's any local tops in the near term, well, then be extremely cautious, of course. Thanks for watching, guys. I might not be able to put out a video tomorrow, which is why I'm doing this one today. So thank you for watching, and have a wonderful Thursday. Take care.